that, a brief look at the way things played out on the NSE yesterday. A standout feature for you and the kind of trade you're anticipating today?
Oh, hello, Alishia. Thanks for having me. Yeah, we've actually seen a downward trend in the market, and like you had mentioned, it was mainly driven by trades in the distressed banks. We've seen continuous downward trends and investors exiting those stocks. And like we had mentioned in the past, that investments around those stocks were really more speculative driven really than long-term investments. And in our view, we'd expect this trend to continue until Amcon comes out with details of banks that have sold toxic assets to it and at what price as well. So long as investors will be able to see how much value these banks are being able to receive from Amcon, and also the amount of capital injection Amcon would be giving to those banks as well. Because I think one point we've always made is the fact that investors really wouldn't be interested in coming in long term in those companies until they're really sure how much these companies are valued at. And until we see that, we would still continue to see fluctuations in such prices and more volatility around them. And I think it's a different case with the much stronger banks. We've seen more or less a steady trend in their share prices. Yesterday, most of them appreciated in prices, and we'd expect to see that trend. And I think the trend we've seen from foreign investors is that there's been increasing investments, even though at steady prices and not necessarily trying to beat up prices, but we've actually seen an increasing investment in those banks, and would expect that to continue going forward as well, because I think the reality is that impact of Amcon will be very minimal to those banks. I think apart from banks that are really interested in buying the distressed banks, and also EcoBank that has a huge margin exposure, the other banks won't really be affected by activities on Amcon. And so that's why, even though Amcon hasn't come out with more details, we've still seen a steady increase in such prices, and we'll see that trend continue.
Especially in a context where we had African Alliance issuing a note just last week saying that Nigeria's banking industry is undervalued by roughly 36%. Are you in line with that kind of sentiment at this stage, that that's the extent to which the sector may be undervalued at this stage?
Yeah, we have that view as well, because if you look at our own coverage, we cover about 10 Nigerian banks, and most of them are trading at a discount of 25% to their fair values. The sector average upside potential is at 25%. So we share that view that there's still value in these companies, and most of them are trading at significant discounts. And if you look at the tier 2 banks, most of them are trading below one-time book value. A bank like Fidelity Bank is trading at 54 times 2011 book value. And so it's clear that there's still value in these banks, even though a few banks like GT Bank are trading at a premium of 1.8 times. But if you consider the strong ROEs that has been delivered by the company over the years, our Q3 2010 ROE stood at 17%. Versus a sector average of 10%. So I think the strong ROE for a company like GT Bank still shows that there's still value in the bank. And so I think overall we still see value. And even though there's still been a muted growth trend in loan growth at this time, we'd expect that going forward from 2011 and beyond, there would be an average of a 15% loan growth, and a few sectors that would drive that. We'd expect oil and gas sector to drive that. Capital expenditure in the telecom sector will also drive that, and also investment in infrastructure in the country. We'd expect that to drive loan growth for these banks going forward. So I think overall, for the strong banks, there's still the outlook is bright for them, and we'd expect value to keep on growing as well for these banks going forward.
Muyiwa, just looking at that interest rate decision that we're anticipating later this afternoon, just how closely are the markets looking to that rates decision? What is your view in terms of whether we should be seeing an interest rate hike, given that we've got inflation sitting at 13.4%?
I think at this point in time, in our view, we feel the CBN is still much more concerned about trying to grow risk asset really, and less concerned about inflation at this point in time. So we'd still expect more of a steady monetary rate policy and more of a conservative stance really, and not necessarily, I don't expect a hike at this point in time, even though the last monetary policy, there was an increase in rates, and I think analysts didn't expect that. But I think at this point, we still expect monetary policy rate to stay maintained at 6.25%. And I think for inflation, we've actually seen a decline in inflation month on month, and so in our view, would expect that this trend would also continue going forward. So I think the major concern for CBN right now will be more of credit creation for banks and not necessarily trying to curb inflation at this point.
Well, just taking a look at the picture from here on out, I mean, lots of focus on that inflation number. You've said that it's come down pretty significantly of late, but just looking at prospects moving forward, we still need that inflation figure to get within, or below 10% and at single digits.
Yeah, sure. There's that intention. I think CBN obviously wants that to happen. The drive is for inflation to be at maybe 9% at the maximum. And so I think obviously the CBN would have that in consideration as well. But, you'd have to consider cost of funds as well. I think the CBN also wouldn't want funds to be high right now, and we want to encourage lending as well. And so if a rate hike obviously won't encourage that at this point. So I think it's really trying to balance inflation, managing inflation, and also managing cost of funds to encourage risk asset creation. And I think globally there's still that risk-averse nature for banks at this time. And so I think it's really going to be tough for the CBN to try to balance that at this time. Obviously, it's a point for concern.
In terms of asset allocations, I mean, what kind of sector rotation are you seeing in play at the moment? Or is capital flow happening more on an asset allocation basis, like I said, from bonds now into equities?
I think for asset allocation, we've seen more of a uniform split. Because I think local fund managers have still been quite risk-averse, even though we've seen increasing activity in the stock market from them. But I think overall, because a number of fund managers have been burnt in the past, and also for the pension fund as a whole, there's a limit, a cap on how much funds can be invested in the stock market. So I think because of that limit as well, the insurance sector also has a limit. There was a new guideline that was published a while back, and some limit was set on investments in the stock market. And so because of that, we'd still see more for fund managers. There will still be a larger proportion in fixed income than in equities.